Manish Sonthalia joins us. Let's say good morning and hello to him. Long time no see. How you been, my friend?
Morning. Morning, Nikhil.
So, what's keeping you busy in this market? Are you just purely enjoying the market momentum when suddenly nobody wants to sell? Everyone is convinced that things will look up, and just when the political, picture became clear, you got a lot of support which is coming from global cues also. So it's like a picture perfect market, right?
Yeah, I mean, it's a Goldilocks sort of a scenario, but I don't think it will pay you well if you want to play a contrarian because we are in uncharted territory. And obviously, if all the factors are positive, I mean, it works well if you ride the momentum. So I would believe that markets are still headed higher and you got to do your stock picking within this entire setup. And that's how we are placed, I would think.
They're headed higher. Why are they headed higher? One view is that FIs have not come back and they will come back. So we are looking at huge inflows of liquidity. Now the problem with that view is that everybody has the same view.
I mean, it's a question about flows, and you can't ignore India for too long. I mean, that's the entire truth. Because if the fundamentals are supportive, if the macros are supportive, both global and local, then obviously it's only a matter of time. I mean, there will be difficulty in finding good quality paper when the flows, turn positive, also from the global side. So I mean, at the end of the day, it's a bottom-up stock picking. I mean, that is how we would like to place it. I mean, there's no denying the fact that the outcome for the next many years to come is going to be positive, but it's going to be our individual stocks.
Picking your spots. What are those stocks where you think that they can still make money?
Obviously, financials are an ignored lot, and have been underperforming for some time. And of course, if the profit momentum is to happen, then financials will lead. That's one space. I would believe technology again is a comeback sooner than later. Again, valuations here are very, very palatable. We just saw the recent listing of Tata Technologies. What a euphoria you've seen. So, technology is again one area where, there will be good growth. And the third space is only a matter of time is your pharmaceuticals. Again, they will come back on a low base. So I think valuations where these are comfortable are these three sectors which should lead from the front.
That's quite interesting, Manish. Help us understand where is it within these three sectors that you talked about do you find value? I mean, are these blanket calls in the entire sector or more a stock-specific segregated approach?
So both within the PSUs and let's say the private sector banking space, there's ample value. So within the public sector, let's say financiers, we would like the energy financiers, the likes of let's say PFC, REC, Ireda. Within the private sector, obviously the known names are there. I mean, you will have a blind call on an ICICI Bank being on the positive side, then HDFC Bank being on the positive side, just based on pure valuation. I mean, you can't go really wrong in these names where valuations are mid-teen types. So that's how we think it's, and again within the financials, the platform companies. So whether it be an exchange platform company or a repository exchange platform company, or let's say broking platform companies or AMCs, I mean, I would think that these are the spaces to own within the financials for the next many years.
That's quite interesting, Manish, because there is that conjecture in the market whether the meat of the rally in the power stocks, at least in the near term, could be behind us or not. But clearly, you don't seem to think so, right?
I really don't think so. When government of India wants renewable capacity to be 450 gigawatts by 2030, and within that solar 300 gigawatts, of course, you could say that numbers are very full for the near term, but it's not about the near term. It's how far into the future can one look. So I think energy is one space which will buzz with activity. I mean, it was long said that defense stocks also were very full in valuations, but the valuations have only got richer with each passing day when you have more defense orders coming through. So, I mean, this defense story, power story is not for 1 year or 2 years, it's for many years from now.
Right, look to play some of those themes for the long haul. Manish, what about the earnings? What is it that you're anticipating in terms of earning trajectory down the line? Any specific sectors you believe could likely surprise on the upside?
I think one sector which could surprise on the negative side is the consumption space for the third quarter at least, because we believe that on our channel checks, broadly the consumer discretionary space is a bit soft post Diwali. That will actually have a rub-off impact, on the white goods space and other discretionary names for the third quarter. I think on an overall basis, an 18 to 20% trajectory is par the course, where autos are firing on all cylinders. You have financials, doing quite well. You have capital good players, which will do quite well. And I think even the pharma space, both the raw material cost on the negative side, as well as domestic inflation price linked increase, that should rub off well as far as the domestic pharma space is concerned. So I believe these are the areas where you'll find positive trajectory on the earnings. And of course, the PSU basket is in its own trajectory altogether, both on the PSU bank side and even the other PSU names, where these names could really surprise you on the positive side as far as the earnings growth is concerned.
What do you make? What do you make of this unsecured lending red flag which has been raised by Reserve Bank of India? I mean, banks have a exposure to unsecured loans, and look at stocks like Paytm and Aditya Birla, Capital, how they're getting smashed.
I mean, it was a given, Nikunj, that unsecured credit was growing. The costs were just too high. And of course, banks used to allude to the fact that unsecured lending was just about 5% to 10% of the overall book. But of course, the next NPA cycle, according to me, is going to come on the retail side. And we have been in a very benign credit cycle for the last 3-4 years. This was too good to last. And of course, with RBI's clampdown on unsecured retail, the raising of risk weights, I mean, just one step in the direction. It's a right step, I would believe. And as far as Paytm is concerned, bulk of their loans was basically personal loans, and less than 50,000 ticket size. Of course, they are going to get hurt very, very badly on this front. Growth rates are going to plummet significantly. And even NBFCs who are financing bulk of these unsecured loans, I don't think it's going to be a problem majorly for the banks per se, because as we said that proportion of unsecured lending to the overall book is very, very manageable. But the NBFCs are going to be at the front. And of course, let's say in the case of Paytm, if you were to shift from personal loans to merchant loans, there the spreads are not that big. It's lower than your personal loans. So it's not as profitable as your personal loan segment. And to move the needle away, the mix going to change in favor of, let's say, merchant loans. I mean, that's going to have a bearing on the valuation. So, and valuations were pretty full, I would believe. So, that's how I would look at it. Very careful with the NBFC space. Not so worried about the banks per se, particularly large banks. But yeah, smaller banks catering to business loans, or loan against properties, I would tread with caution.
Manish, just tactically, in the very near term, would you say that the meat of the rally at an index level and downwards is going to play out from now up until the 2024 elections?
Of course, I mean, as I said that, if you have all the factors actually turn in positive, and it's a very, very broad-based rally. You can't really segregate one sector vis-a-vis the others, barring, let's say, a specialty chemicals, which is going through its own round of destocking and so on and so forth. But I think, the rally is very, very broad-based. Sectors which have not participated previously in the rally so far will have valuations comfort, so they'll play a catch-up game. I mean, who could have imagined that, let's say, an HPBP suddenly become the flavor of the market? You have seen stupendous rise in the oil marketing company. But such is the case. There is a fear of missing out. There is a FOMO factor. And wherever there is valuation comfort, investors, both local and global, will latch onto it, because, India is an unavoidable market at all now.
That it is. And seems like across the world, we are perhaps one of the top choices when it comes to alpha opportunities. Manish, great to have you on the show. Thank you so much for taking the time out and joining in.